is, of course, head equity at MarketSmith India. Great having you, Mayuresh. How do you look at the numbers coming in from some of the companies? And this is basis the Q3 updates that are flowing through. Tata Steel, very strong numbers, especially on the domestic front. Nothing much anticipated also, right, from the international front. So how is it looking in your opinion? We've seen a decent rally in the stock price as well. More legs to this one.
Morning, Harsh.
Morning.
No, I think decent set of numbers by Tata Steel. And again, I think what might aid them going forward is the safeguard duties that the government has recently imposed. What it does is, whether it's HRC, CRC, coated steel, a large part of manufacturers will come into the ambit. And therefore, I think where the pricing was coming under the pump, the realizations should start getting a little stronger. You've heard a few players already who have taken a few hikes as we speak, with input costs still staying relatively benign. And with the safeguard duties in place, the expectations of utilization levels picking up for the sector as a whole, at least on the domestic operations, with integration happening, and a large part of that integration when it comes to captive mines, captive power, starting to play out in terms of absolute numbers and reported numbers, both on an EBITDA and an EBITDA per ton basis. I think the sector looks poised for a reasonable amount of growth going forward. So yeah, decent set of numbers for the sector. We remain a little bit more sanguine in terms of the ferrous stocks as we speak.
Okay, so that's on Tata Steel. Mayuresh, talk to us about some more stocks that are going to be in focus today on the back of some updates coming in, some numbers coming in this morning. AngelOne is another stock that we've been talking about. The monthly update or the quarterly update that the stock gives, the company gives, is out, and there has yet again been a fall in the number of client acquisitions, and volumes have also declined on a month-on-month basis. What is your take on AngelOne and some of these exchange-related stocks?
Very good morning. No, I think as a sector or as a theme, I think it should do well structurally over the next few years, purely based on the fact that underpenetrated industry, the number of accounts will keep on going higher. And it's an all-round process, whether it's platform players, whether it's the demat players, whether it's the asset managers who probably will be also getting in a huge chunk as far as managing money is concerned for wealthy families and wealthy individuals as well. And therefore, as a theme, it should continue doing well. For AngelOne, I think the whole thesis in terms of a large part of their client pool actually having a larger turnover in terms of the derivatives market and the positions that the exchanges have now put forth in terms of the expiries, I think definitely plays out on volumes. They are trying to probably get back on track in terms of more cash delivery based trading, the expectations in terms of opening up of their wealth management arms as well. But again, I think that is going to take some element of time before benefits start kicking in. So incrementally, I think what has probably happened in terms of regulatory changes is obviously going to play out on AngelOne. But again, within the space, platform players, we continue holding MCX in our global portfolios as we speak. We do like asset managers, so HDFC Life, Nippon. The TER exercise that is probably happening for these players should probably play out in terms of numbers. But again, I think over a longer period of time, structurally, I think they are well placed in terms of operating costs now remaining stagnant with a lot of operating efficiencies kicking in through technology. As more volumes kicking in as a funnel approach, I think the relative numbers based on bottom line growth should be relatively better. So I think we do like a few exchanges and these asset managers.
Mayuresh, one sector which is now outperforming the others is IT. We saw some kind of institutional buying picking up in the last fortnight of December, and in this year itself, we've seen the IT index up nearly 2% in the last few days. How do you see some of the IT stocks? Infosys, TCS, Wipro earnings are expected next week for them.
Morning. So Sajid, if I have to break up between large cap and mid cap IT, obviously I think in terms of a valuation matrix, large cap probably seems to be better placed in terms of the mean standard deviation averages compared to the mid cap. However, I think the kind of deviations that we are looking at in terms of accelerated investments required in terms of creating more AI agnostic tools over the next few quarters and years, I think that should start playing out, upskilling of their key employees to ensure that utilization levels stay intact. And again, I think the pricing related to clients spread across different sectors, whether it's retail, hospitality, BFSI. Yeah. And therefore, I think it's going to be a very interesting journey, specifically for the large cap players. Mid caps probably have a little bit of an inherent advantage in terms of order wins being in that very sweet spot between $1 million to $20 million odd dollars, depending on which mid cap IT company you're looking at. Pricing does not seem to be an issue, looking at a lot of management commentaries in the quarter gone by. And therefore, I think our own sense is that even if valuations are a tad bit on the higher side, the PSRS ratings, the expectations in terms of earning stability probably might just stick around with mid-cap IT. For the sector as a whole, we're probably looking at a weak seasonal Q3 with furloughs, Christmas holidays, lesser revenue days. But constant currency growth, in our opinion, should probably remain a lot more stable for mid-cap IT. Persistent emphasis is something that continue holding that level.
Kunal, what's the take with regard to AngelOne on charts? This one is something which can offer opportunities, right? So trying to get a sense.
So for the last, I think, 5 or 6 consecutive weeks, the stock was trading into a negative trend. I think from 3,000 levels or 2,950 thereabouts, the stock had corrected towards 2,400 levels till end of the previous week. This week, there is some revival which has come back into AngelOne. But then when I look at this in the context, I would believe that 2,400 could be a good base or a support for the stock in the near term and would expect the stock to build up.
Okay, we also have Somil Mehta with us on board, Head Alternate Research at Mirae Asset, joining us. Somil, hi, morning. Talk to us about where you're seeing the market headed. It's been a subdued first 3 days at least of this week, and today is the weekly sensex expiry as well. Tell us, how are you expecting the markets to pan out today, given that we've been slightly subdued so far this week? Can we expect a bounce back? Because the trend that at least Kunal and I have been noticing, at least in the month of December, we saw that every time the Nifty expiry was slightly subdued, the sensex expiry tended to do better. Of course, you had fundamentals also that were supporting back then, but right now, what is your take on the charts?
Absolutely, absolutely. That's a good one actually. Good morning to everyone. My view on the markets is still positive. We've seen a little bit of correction in the last couple of trading sessions, 3 trading sessions. However, we are still making high tops, high bottom on the weekly charts, on the monthly charts. So overall, the trend still remains positive. Now, what has happened yesterday is we've taken support at 20 daily exponential moving average, which is around 2680, and we have slightly recovered. And now from here, I'll be expecting markets to take support around these levels and start the new move on the on the upside. Now the target still remains the same, 26,350, and if it sustains about 26,350, 370, then I think the next level to watch out would be 26,700, 26,800 levels. So I'm pretty positive in the short term, in the medium term, and the strategy should be to buy on declines. On the downside, the most crucial level at this point of time is 26,000, which is a psychological mark, and 25,700. So these are the 2 levels which I'm looking out for as a support. I'm not expecting markets to go below these levels. Now in the Bank Nifty as well, I think Bank Nifty should outperform from here. It has taken support at 10 daily exponential moving average, which is around very close to 59,750. And Bank Nifty should start a new move on the upside for a target of 61,000 or 61,500. So pretty bullish on banks. ICICI would be my preferred pick. But yes, buy on decline should be the strategy for Nifty and Bank Nifty both. And I'm pretty positive on for short term and medium term both.
Mayuresh, let me come back to you. LG Electronics will be in focus. You've got 2% of the share capital where anchor lock-in expires today. Now, excuse me, the stock listed, of course, at a significant gain versus the IPO price, still trading above. If at all, we could see a pullback with regard to the stock price. Opportunity to buy, you reckon? Mayuresh, believe you're on mute.
No, I'm not.
Okay. Sure.
So we still believe that I think we will wait out for Q3 numbers. Obviously, consumer durables as a space also has structural tailwinds. If you probably look at the industry construct, air conditioners, air coolers, fans, washing machines, refrigerators, there is still scope of growth happening for all these sub-segments put together, and LG has a strong presence in all of them. Amidst all this, I think the competition is also intense as we speak. But our take is, and the way we look at it through Panray, our institutional software, is that the sectoral rotation graph is still pointing out for selective BFSI to remain strong. You're probably looking at green shoots that are probably happening in consumer discretionary as we speak. A few of the infrastructure related names and a few consumer discretionary related to domestic stories. Very regional centric. And therefore, our sense is that if I have to choose based on the data points that we probably got at this juncture, consumer discretionary a tad bit better place than consumer durables.
Okay, and Mayuresh, I know you prefer consumer discretionary over, consumer discretionary over consumer durables. But with regard to consumer durables, just given the fact that copper prices have spiked so sharply over the last month and a half, do you see any meaningful downside to demand as a result of possible pricing going up? Do you believe that happening?
So, Harsh, I think they will be having an inventory. So, I think at least Q3 will be safeguarded to a large extent. And based on the inventory dynamics for the industry as a whole, I think even Q4 should largely be balancing itself out. Now, if copper prices stay elevated over the next 2 or 3 months, they will have no choice but to pass this on to the consumers. But again, at that point of time, I think it should be a marginal pass-through that probably happens with copper price increases. And how much of an impact does that have in terms of demand sentiments and dynamics is something to be watched out for. But largely, I think Q3, Q4, with copper prices increases, the inventory probably is well safeguarded as we speak. Obviously, you will have those inventory changes based on the closing prices that copper will post. So yeah, wait and watch, as I said.
Okay, lots to watch out for. We've got updates coming in from a lot of stocks. Positive news flow coming in from Gland Pharma this morning, wherein they've received the US FDA approval for the ANDA for their eye drops. That's the ophthalmic solution drug that they've developed. And this is for conjunctivitis-related ocular itching. So yes, eye drops are looking good. And that's the US FDA nod coming in for this segment. Gland Pharma, Kunal, how is it shaping up on the charts?
See, I think Gland Pharma on the short-term charts has been an underperformer of sorts. The stock has corrected from 2,100, I think, just in the month of August, September, towards 1,600, 1,650 mark. So it could take a lot of efforts for the stock to try and make a very strong comeback, because the selling which has happened for Gland Pharma was on the back of periodically high volumes. I would not say sustainably high volumes, but periodically the volumes were on the higher side for the stock price. So you might need to see a dose of very, very strong positive news flow or events surrounding the stock price, which could call in for a big revival. Otherwise, this could just be maybe a flash in the pan kind of a rally.
Okay, so that's on Gland Pharma. Mayuresh, very quickly before we let you go, Meesho was down 5% yesterday. The lock-in period had opened for 2% of its equity. Talk to us about if this 5% cut now makes Meesho as an attractive buy.
No, we'll still wait.
Okay.
And again, I think for platform companies, I think sustainable, profitable growth is something to be watched out for. I think it's a great platform. Nothing to no two ways about it. But our own sense is that we'll still wait and watch when it comes to platform companies.
All on your list, Mayuresh, something that you would be interested in?
Sorry, Harsh, I didn't get a question.
Cipla. Would Cipla interest you, given the kind of move yesterday? Opportunity to buy?
So Harsh, I think it's two ways, right? I think in terms of pros for Cipla, the kind of pipeline that Cipla has, specifically in terms of the respiratory FTFs that they've probably filed. There is a multi-respiratory FTF and there is a very super specialty FTF on the respiratory that it has already filed. Now, if that approval comes through and those approvals come through in key markets, they've got a large addressable size. On the other hand, they are probably getting beleaguered by issues related to regulation and otherwise. So I think you need to keep your eyes peeled for this one. Keep it on your watch list, keep it on your radar. But within pharma as a space, our own sense is Torrent Pharmaceuticals is something that we believe has a very strong pipeline within itself, and they can probably have a lot more stable earnings growth going forward. So Torrent is something that we continue liking, but we'll definitely have Cipla and Sun Pharma both in our buy watch lists.
Okay, Mayuresh, great to be speaking with you this morning. Thanks so much for your time.
Thank you so much.